Bitcoin mining is now more expensive than ever. In fact, the average cash cost to mine a single Bitcoin has surged to around $74,600, a record high, and that's just the direct operational cost. When factoring in hardware depreciation and other overhead, the all-in cost skyrockets to roughly $137,800 per BTC. To put that in perspective, some public mining firms are effectively spending more per coin than Bitcoin's current market price, at least on paper. This unprecedented situation raises a big question. Should we be worried? Let's briefly explore why mining costs have hit these highs, what it means for Bitcoin's price and network security, and how it impacts both everyday crypto users and aspiring miners. Spoiler, the network isn't about to collapse, but there are important implications for everyone watching Bitcoin. Of course, the main trigger was the 2024 halving. Same hash rate, same hardware, same energy, but only half the coins coming out the other side. At the same time, Bitcoin's hash rate and difficulty hit all-time highs. More and more machines are competing for that smaller reward, so miners are burning more electricity for the same 3.125 BTC per block. Add rising and volatile energy prices on top of that, and you get exactly where we are now: record high production costs and razor-thin margins. Mining has turned into a heavy industrial business where only ultra-efficient operators can breathe. So, does that threaten Bitcoin's security? Right now, no. Paradoxically, these record costs go hand in hand with record security. The network has never had this much hash power protecting it, which means it has never been more expensive to attack. And if some miners can't keep up and switch off, Bitcoin's difficulty adjustment kicks in. The protocol automatically makes mining easier, so the remaining miners can still find blocks roughly every 10 minutes. Weak miners can be forced out, but the network itself just rebalances and keeps going. The real question isn't security, it's centralization. High mining costs squeeze out smaller miners and concentrate power in the hands of a few extremely efficient, well-funded companies. If only a small group can afford to mine, the mining landscape becomes more centralized, not enough to break Bitcoin, but enough to shape who controls new supply, who survives the next cycle, and how much influence a handful of players can have. What about the price? For years, analysts have treated mining cost as a soft price floor. If the cash cost to mine one Bitcoin sits around $74,000, miners have very little incentive to keep selling below that level for long. It would simply bankrupt them. Over time, that tends to pull the long-term bottom range of Bitcoin higher, a bit like gold rarely trading far below its mining cost. But there is a catch. If the market price drops well below production cost and stays there, stressed miners may be forced to dump reserves and shut down machines. That can create short-term downside volatility, sharp sell-offs, minor capitulation headlines, and scary charts, even if, historically, those events often mark late-cycle bottoms and never the end of Bitcoin. We can simply see it as something positive happening. So what does this mean if you don't mine at all? For everyday crypto users, it mainly means two things. Security is stronger than ever. The amount of work defending the network is at record levels. Those huge mining costs are essentially the bill for Bitcoin's security budget. The structure of the market is changing. As mining becomes more expensive and more professional, Bitcoin starts to look even more like a scarce, industrially produced asset with a real rising cost of creation. And for people thinking about mining, this environment is a big reality check. Mining is no longer plug in a machine and print money. With costs at these levels, it's mostly a game for players with very cheap power, very efficient hardware, and serious capital. Without that edge, it's often less risky to own Bitcoin than to try to manufacture it. So, should we be worried? Not about Bitcoin collapsing. The protocol is doing exactly what it was designed to do under stress, but we should pay attention because record high mining costs are quietly reshaping who can mine and how much they have to sell. Thank you for your support and for watching until the end. Share this video with a friend who still finds this kind of news hard to understand. And as always, stay curious and stay hodling.